Toronto's Condo Convos, casual chats about important condo topics. Today's topic is unit owner insurance. Listen in and be on your way to achieving social and financial success at your condo. Today's topic is strictly on unit owner insurance and not building insurance. So with me, I have my expert panel. I have a partner at Shibley Wrighton, Deborah Howden, Tom Gallinger from Atrons Council Insurance Brokers, and Vic Persaud from Suncorp Valuations. Today, when we're talking about unit owner insurance, I'll use my nephew as an example. So he's young, he's in his 20s, he's finished college, and now he's going to be looking to move out of the family home and purchase a condo perhaps. So what should he know about condo insurance? Does he need insurance? Because buildings have coverage. I'm going to turn it over to Vic first.
Well, yeah, and condos do have insurance, but that insurance only covers the building's common elements and the standard unit. It's important for your nephew to make sure that he has unit owner's insurance. Coming back to the building insurance, it only covers the standard unit, and what the standard unit is the typical finishes that come with the building at the time of purchase. For older condominiums, they may not have a standard unit schedule. What they may have is a standard unit bylaw, which specifies all of the finishes within the unit. So whether or not he should have insurance, definitely he should have insurance. That insurance would cover items not covered by the condo's insurance, which are such things as the betterments and improvements to the units. Betterments and improvements are, for example, upgraded floor finishes, it could be upgraded countertops, fixtures, any of his personal belongings, and also any appliances. Sometimes developers throw in appliances, but they're not covered as part of the standard unit.
Thanks. Tom, what kind of insurance should owners consider?
Well, it's great what Vic brings up and what you brought up. A lot of times unit owners think, you know what, I'm moving into a building, the building has insurance, I don't need to get anything. It's not top of mind, but it's actually critically important from what we see as an insurance broker for unit owners to get insurance of their own. As Vic had said, the building insurance covers the shell, the common elements, and those standard finishes inside the unit. Unit owners need coverage, number one, for their own personal property, so anything movable inside the unit. They also need coverage for, as Vic had said, betterments and improvements. So really that level of finishes over and above what's described in their corporation's standard unit bylaw. They also need coverage for additional living expenses. So basically, if there's a loss or damage in their unit so bad that they've got to move out while the repairs are being done, that's their responsibility for those costs, and their insurance can cover that. So they need to make sure they have that coverage. There's also some other coverages unique to a condo unit owner where they may be charged back a deductible in the corporation. They may be assessed certain costs if the corporation has shortfalls in their own policy. Those are also coverages available for an owner.
Just a quick comment about the additional living expense coverage. Sometimes unit owners misunderstand what that coverage involves. So we had a case recently where somebody called and said, I have that coverage and I'm going to go out and get an apartment under that coverage, and it has a kitchen, but I want any groceries that I have to buy and any any restaurant receipts, I want those reimbursed. And of course the coverage extends to really replacing what you had before as opposed to improving the situation. It's not a betterment situation.
No, that's exactly right. And that's really the whole purpose of insurance, is when you have a sudden and accidental loss, they want to put you back into the place you were prior to the loss. So they're not going to try and make you better. Otherwise, everybody would be having claims all over the place so they can stay at the Ritz and eat fancy food.
So Tom, how do we make sure that a unit owner has adequate coverage and there's no gaps between what Vic had mentioned with building insurance and what, as a unit owner, you want to make sure you have coverage, you don't find out at the time of a loss that you weren't covered for that? What would you tell an owner?
Great question. I would say you really want to try and line up your owner's coverage with the corporation's coverage, and you want to try and line up your coverage with the way that your building is set up from an insurance and a deductible standpoint. The best way to do that is really to work with a broker. Go to that broker who understands what your needs are, understands the insurance that your corporation may have, and can line that up, whether it means putting it with the same company that your corporation's insurance is with, or whether that means just lining up the coverage so there's no gaps and potential shortfalls.
Deb, I'll turn it over to you before
Yeah.
we turn over some common pitfalls.
Yeah.
Is the Condo Act doesn't require an owner to have insurance as a mandatory practice.
It doesn't, no.
So what do you say to that? How do we make sure unit owners have insurance and they understand the importance of it, even though it's not a requirement under the Act?
Yeah, it is not a requirement under the Act, and we don't expect it will be anytime soon. One thing I would mention about that, Tania, is unit owners would also have to look at their condominium declaration, because just because it's not a requirement under the Act doesn't mean they don't have to have it under the declaration. Some declarations actually do provide for unit owners to have insurance, so they should check their declaration. But quite apart from that issue, from my perspective, and probably everybody chatting about this, it just makes plain and obvious sense for a unit owner to go out and to get insurance, because it's a risk that they are taking on if they don't have the insurance. And when you weigh the risk of having to pay for the cost of repairs up to the corporation's deductible and the cost of premiums, a prudent unit owner would for sure go out and get that insurance coverage.
And we know what we're seeing most recently in the last few years is developers in new condominiums are requiring owners to purchase insurance to have the initial closings. Do you have any comments on that?
At occupancy,
Right.
they are requiring unit owners to do that. So the only issue there is once they get that insurance coverage, there's no real mechanism for the condominium corporation to ensure that the coverage is ongoing, and it's very difficult for them to enforce unit owners having insurance. If they wanted to do it by way of bylaw, that's really a gray area, because under the Act, in order to enact a bylaw, without getting too legal or technical, you really have to come under some subsections under the Act to fall within the jurisdiction of Section 56 to be able to enact a bylaw. Now, there's this general section that says the corporation can enact bylaws for the general conduct and affairs of the corporation, but unit owner insurance isn't really for the affairs of the corporation. It's really unit owner affairs. So from a legal perspective, very difficult to enforce unit owners to actually get insurance if it's not contained in the declaration. And as I say, a prudent owner would get it in any event.
Great, thank you.
And the other thing too is even if unit owners had to get insurance, there's no guarantee they're going to get the right insurance, right? And unfortunately, that's what we see time and time again. If a corporation has a large loss, there's a number of unit owners that don't have coverage, but there's also a number of unit owners that don't have the right coverage.
Right, and that's what we want to talk about next, is from the manager's perspective, we see three key areas where people find out after the fact that they're inadequately covered. Some we've talked about a little, and I'd like to do a deeper dive for our audience and viewers today, is the displacement accommodation that you had talked about a little bit, the missing elements, so what the building insurance provides versus what the unit owner should provide, and also that deductible chargeback opportunity. How do you get insurance for that to make sure if you are being charged back the deductible, you have the insurance or the capital to be able to fund that? So I'll start with Tom to start talking about the displacement or accommodation. Deb had mentioned the Ritz-Carlton earlier, but maybe you can talk about what additional living expense coverage a unit owner should have in the event that they have to leave to get some work done.
Yeah, definitely. Additional living expense coverage, it comes differently in every policy, and there's a whole bunch of policies that unit owners can select from out in the marketplace. That's what makes it a little bit tricky. Most policies typically provide that coverage, but the question is, how much coverage do you have? And it's not usually a time amount, but rather it's a dollar amount. So this is how much you can spend over, the time of the loss. And a lot of times we see if a corporation suffers a large loss, typically a fire, which causes damage to multiple units, could be in a high-rise, could be in a townhome style condominium, is that it's going to take a long time for those repairs to get completed. It never goes as quickly as everybody wants it to. A typical fire is going to take at least a year to get owners back into their suites. I've seen more complicated matters take 18, even potentially 24 months. And then you look at, as an owner, what would my monthly cost be to live elsewhere? And if you're living downtown, it could be $4,000 or $5,000 on a month-to-month lease. So you need to take that multiplied by your potential outage time and make sure you've got enough dollar value there to carry you through if something big and unexpected happens.
And at the same time, so if you are displaced, and it could be anywhere from 12 to 18 months, you still have to pay your maintenance fees, right, Deb?
You sure do.
Right.
Yeah.
And so you need to have adequate coverage to make sure you can afford to continue paying that, plus your out-of-pocket expenses for being in a different home or location for an undefined amount of time. So Vic, I'll turn it over to you to talk about the missing elements. You had talked about some betterments and improvements in building coverage and appraisal values versus what you, the owner, is required to cover.
Yeah, no, and a lot of the insurance appraisals that we do, part of that process involves reviewing standard unit bylaws for the condominium to see what insurance coverage the condominium has to have. And what we noticed is, from those standard unit bylaws, one of the most common areas that condos choose to exclude are the floor finishings and countertops. And you may ask, well, why floor finishings and countertops? And the history behind that goes that there was a high number of nuisance claims many years back where a unit owner would spill a glass of wine on their carpet and then try and claim the damaged carpet from the insurance company. And so there was a high number of claims, and we all know with insurance is the higher the number of the claims is the higher the premium. So to mitigate this risk, what condos did was they started passing standard unit bylaws where they excluded the floor finishes and countertops, which were the two areas where a lot of losses were happening. And that's definitely the most common area where we see some of the exclusions in the appraisals that we're doing. But it can go even further, and there are condos that choose to exclude all of the standard finishes in the unit. So, definitely in that scenario, you want to be talking to your insurance broker and making sure that you have sufficient coverage for all of those standard features and finishes, from the floors to the ceilings, your fixtures, all of that could be excluded. And that's a scenario where you don't want to be in, where you have no coverage for any of the finishes in your unit. Let's say if there's a fire or a flood or whatever the case may be. The other area, that's excluded is our appliances. A lot of times with new construction, you may see a developer may throw in the appliances, but that's not included as part of the condos insurance. We have seen a few instances where appliances have been part of the standard unit bylaw, but it's not a common thing that we see. And I'm sure, Tom, you can probably comment on that too. I mean, do you see appliances a lot? Or?
Typically, they would be the unit owner's responsibility in terms of what we would see. Yeah. And that's a good point in terms of sort of a bare bones bylaw or a bylaw that doesn't include really any finishes inside the unit. Those owners, if you live in one of those buildings, you're going to need a very robust unit owner's policy to cover all those finishes inside the suite, because the corporation in those cases is covering very little at all. So, yeah.
Right. So from the deductible chargeback, regardless of it, maybe you can talk, Deb, a little bit about at fault. Do you need a bylaw? What's the standard practice? What are you all seeing from a claims perspective with respect to deductibles and chargebacks? I'll start with you, Deb.
Well, so the first issue is so many unit owners think, as we talked about earlier on, that if there's corporation insurance, it's covered. And if I'm not at fault as a unit owner, I'm not going to be responsible for any payments, for any losses, even if they emanate from my unit. And that's actually incorrect, because under the Act, as it's now drafted, the corporation can charge back the cost of repairs right up to the corporation's deductible in two circumstances, and they're cumulative. One, if the damage comes from the actual unit, and two, if the damage is as a result of an act or omission by the unit owner. An act or omission is sometimes misunderstood. It's not strict liability, but it's also not up to the level of negligence. So I can give you an example. If a unit owner has failed to maintain a toilet valve, and that causes some flooding or leaking, the corporation could fairly take the position that that lack of maintenance is an omission, and that the unit owner would be responsible for the deductible or the cost of repairs, whichever is lesser. So there's some misconception there.
Tom, can you talk a little bit about varying deductibles? Like, we know deductibles could go from anywhere to from A to Z, and what should a unit owner be prepared to cover?
Yeah, that's a great question, because deductibles, condominium corporation deductibles can vary quite drastically. You may have, the minimum deductibles in the industry right now, $5,000 or maybe $10,000, depending on the size and type of corporation that you are. But corporations that have had some water issues in the past, their deductibles might be much higher. $25,000, $50,000, even $100,000 deductibles. So unit owners really need to pay attention to that condominium corporation certificate when they get it in their AGM package or upon any sort of change to the policy. What are those deductibles? And they need to line up their policy again with those deductibles. So if you've got a $100,000 deductible, purchase $100,000 worth of deductible chargeback coverage on your own unit owner's policy.
Right.
Yep, great. I want to thank the panel, but before we leave our viewers, I'd like some parting thoughts to impart to current or future unit owners, or to boards or managers, of how we can get unit owners to avoid these common pitfalls. Short of communication, we know we're putting the periodic information certificates out to talk about the deductibles. We want owners to have an understanding of what's covered and what's not covered in their specific building policies. But I'll give it to my expert panel for parting thoughts to our viewers to make sure they're adequately covered.
So parting thoughts, very high level, work with your broker. You might not need, if you're on the 18th floor of a multi-unit building, you might not need sewer backup coverage, depending on the language of the particular cover in the policy, and Tom can speak to that. But just work with your broker and ensure that you've got the appropriate coverage.
Great. I would say really take a look in your own policy at the water damage coverage and the way that water is covered. That's a huge cause of loss, whether you're a high-rise building or a townhome site. Water damage is probably about 80% of property losses that we see. So really look at how that coverage is structured, because each different unit owner insurer will cover it slightly differently, and there may be things you need to purchase or add on to your policy, and make sure you've got that proper level of coverage for the exposures that could be facing you.
I'd say review your standard unit bylaw or your standard unit schedule, so you're aware of what may be excluded in the condo's insurance that you have to have in your unit owner's insurance. Simple as that, yeah.
Great. So clearly, what we're understanding is it's not worth the risk to find out after a loss that you're not adequately insured. So good luck, Matthew, looking for your condo. Thank you to my expert panel, and thank you to the viewers.